Hello everyone and welcome to Smart Investing. I'm Albert, the host of the channel, and today I'm going to be doing the video for the continuation on the banking sector, also known as the banking services sector. So they're pretty much similar, they're pretty much related, it's the same sector. So I'm going to be doing that as of right now. I have about 10 stocks here, and we're going to be doing a fundamental analysis and a technical analysis. So let's begin. Let's start off with the first one. I'm going to be working my way from the bottom here, and then this will be the last one. So I'm actually working from the bottom all the way to the top. So let's begin. First one up, I have ESSA, Essa Bank. Let's look at the 1 year. So we can see right away this bank pays dividends of 12 cents. As we can see here, it's been kind of flat. If I was to draw that line, it looks somewhat flat. Even if I was to bring it up to the current price right there, even from that high, from the high of, this was in April of 2021. Even if I was to start up there with a price of 17 and close to 30 cents, still looks pretty flat. It looks like it has a bullish trend, but again, I'm not too crazy about the price. Let's look at the financial data and the financial numbers. I'm going to be looking at everything here. So let's begin. Let's see what we have here. 52-week high and low. I'm not impressed. Looking at that, that's not impressive to me. They are profitable. That's a check mark. So now let's see this. Undervalued. That's good. They do pay a dividend. Check. Percentage yield. So they have a volume. Whoops, my volume's too low. Talking about volume. So they have a PE of 10.8. Forward looking 10.2. So slightly downward revision. So it's still in the 10 range for the PE. So that's good. So the volume is not too much. Not crazy about it. Right away, I can see from all this financial data here, all of that. Me personally, I don't like the stock at all, not even for short term or long term. But since I'm reviewing it, I'm showing you guys anyway. So again, let's see what this bank does. And we'll move on shortly to the next one. They are doing business in Delaware and Montgomery counties. I'm guessing it's in Delaware. It says also in Pennsylvania. That's all I see. I'm not even gonna read the rest since I'm not really interested in this bank. They are far from being good. I mean, you would think you would find undervalued stocks, and there's so many banks, but again, there's just very, very few from what I actually thought were gonna be good. I actually thought I was gonna get maybe 80 to the 100 stocks that were pretty decent or fairly good, but I think since it's funny because I would have to watch all my banking sector videos and actually do like a rerun, and I'll eventually, after I do every single stock that I want to cover, I'll probably do a updated version again, and then pretty much rerun through all the stocks again and see if they're good or not, and do a comparison video. So that would be pretty good to see as well. But yeah, I haven't found any impressive stocks yet to make me go wow, like okay, like that, to actually say that the stock is actually um impressive and it deserves to be like on a watch list, or it's something to have in mind to purchase. So in a way, I actually do like bank stocks, if this makes sense, that do not pay a dividend, because I would assume if they're managing money correctly, they could save that money and reinvest into the company until they're pretty stable with debt and whatever else needs to be paid off, and not spend too much and reduce their costs and whatever else comes their way, and have cash flow and basically get everything in order and actually be stable and have enough extra money to do whatever it is they need to do, and have that cash buffer, for emergencies, and not overspend. That's pretty much it. You just want to find companies that do not overspend and have a good balance sheet, pretty much. I just want to make sure they're good at managing money. That's all there is to it. That's just the common sense thing. That's the main goal for each company and for everything that goes on for the financial data. So, looking at the company, the numbers, I haven't looked at the chart yet. So, let's look at, okay. So, volume is not too bad, even though we're in a volatile month and week because of the whole Ukraine and Russia violence. So PE I like. 52-week high and low I'm not too crazy about. I think that's all I'm gonna look at. Turnover's pretty good. That's a good sign. Market cap doesn't really matter to me as long as they're doing good, performing good. But again, Wall Street's gonna have their favorites and non-favorites, and their flavor of the months and stuff like that. So I already know how that goes. So let's look at the chart here. As you can see, it looks pretty flat. Hasn't really broken out of anything, which for 2021 and for 2022, that's actually not bad, to be honest. Especially for 2022, because starting the year, it's been awful. A lot of stocks have been awful for the start of 2022. And for me personally, it's not a bad thing. I think it's a great thing. I think I've said it before. I've been bearish since 2020 because there was a lot of money printing. So stocks should have crashed in 2020 way further down than it actually was. And they had a bailout for 2 months later, after the supposed bear market or correction, whatever you want to call it. But that wasn't really a recession. 2 month period is not really a bear market. That's more of a consolidation period. It's like, I would say it's like a quick bear market. It's not something that didn't last too long. It was like a little bump in the road and that was it. So 2022 has actually been a longer downtrend than the beginning of 2020. So I'm glad to see that. So anyways, let's look at the 1 year. So again, it looks pretty flat. And the numbers I'm not too crazy about, but I want to see something else. I want to see if they have, yes, they do have 2021 estimates. 2021 net income, they're up 68%. but I want to see what they had in revenue. Okay, so they grew revenue up by a lot. That's good. And what is their debt? Oh, excuse me. At 89% debt. Earnings they have beaten. ROE 14%. It sucks where I don't have estimates for the net margins. So hard to get. But that's okay. I'll just use net income, which I prefer anyway, but I do like the net margin. I like to see everything net, like after everything is all said and done, that's just me. So we have net income from 27 to 45. They grew 22% from 2020 to 2021. This stock is not bad by the numbers, so fundamentally they are okay. I don't know, to be honest, if this is a stock to be watch listed, because fundamentally they're okay, but it's like the stock hasn't even performed well. You would think, put it this way, for the last year, it's done okay. So it's not a bad sign and it's not like a really good sign. So I think even if they go flat this year, that would actually be a good sign because so far, and like I said, in 2022, they have not gone down much. Yeah, you look at the chart, it's gone down uh, a little bit, but not by much. Yes, it's volatile. You have all these spikes here, but it's been volatile to start off the year anyway. But then when you look at the price, it's only gone down like $2, and that's nothing really in 3 months. Well, 2.5, if you want to be more precise. So what I'm saying is this is not a bad stock, but it hasn't done much. So let's look at the 5 year. Obviously, in 2020, stocks went down and then it's gone up. So it's just gone flat ever since 2021. So who knows if this stock might break out? I think I will want to play this on the safe side. So I mean, you could watch list it if you want. Could watch list it. Next one up is RNDB. So as you can see, this one's gone down. Not many people are liking it. Earnings are pretty decent. 52-week low and high is not too bad. It's not too bad actually. Really undervalued. This is definitely a stock to look at. Now this is a stock to actually put on a watch list. So as we can see the chart, we have here, it's gone up and down. So then the 5 years gone up. Now it's starting to go down. Now we look at the dividends, which is nice. So as we can see here, recently, really, really nice in 2022, they have paid a special dividend. Check mark. And a dividend of $2.15 in February of this year, which is also pretty good. I would definitely add this. This is definitely up for grabs. I would definitely add this to a portfolio if I could add, I don't know, like it'll be hard to create a portfolio just of banks, but yeah, definitely this would be up for grabs for an upcoming stock. So yeah, I would definitely add this one. Really, really good. Um, Technicals. Let's look at that. So fundamentally, yes. Then for technicals, um, has it gone below its yearly? No, not yet. So let's look at the 5 year. Let me look at the 5 year. So we're looking at about, if you broke even in 2020, which is almost looks like you would break even if you did buy this stock in 2020 before the pandemic. If you bought it in January 2020 and beforehand, you break even pretty soon. So it's not too far from its 2020 numbers. So yeah, definitely a good company. Next up, CHCO, City Holdings. Make this one a little quicker. So we have here nice earnings. I like that. PE, pretty decent. The reason I say decent, I mean it's a nice PE, but I like to find it undervalued, which it is, slightly undervalued. So who knows if it keeps going down? It could be a better value. Definitely, this company is definitely a watch list company. So what did they pay for dividends? No, come on. They keep showing me earnings. So I'll look at the dividends in a little bit. Not bad. This company's pretty good actually. Pretty good. So they went from 71 to 88. So about 17 bucks, which ain't bad. It could be better, but it's decent. Pretty decent for the year for a bank, especially small cap. So we're gonna look at it real quick, fundamentally a little bit more. I'm gonna dig in deeper. Nice earnings. So we're gonna look at that. Rising dividends. Yeah, this is definitely a good company. Active on the market. Yeah, seems like people seem to like it. So CHCO, there you have it. Pretty flat, but hopefully it can be. It's definitely a watch list, but hopefully it can break out to new highs or something, because it needs a boost. Just needs a little boost. So next up, MYFW, First Western Financial. They are not paying a dividend. Hopefully they can reinvest in that. 52-week high and 52-week low, difference of $14. So we have here is undervalued, low turnover rate, which is good. So now we have a nice trend going up. It was flat ever since July of last year, and ever since then it looks like it's been going up, which is good. So hopefully they can keep that momentum going. Let's look at the last 3 months. It has not dropped in the last 3 months. So as we can see here, let me move my camera. So as we can see here, nice numbers. They are putting up nice numbers. They are doing business where? Out west, I bet. doesn't say any locations, doesn't mention any locations. Let's look at the financials again. So we have here, they've dropped in 2021 compared to 2020. Obviously, 2022 is a slowdown year, so they remain about the same in revenue. Debt has gone down. Net margins, they don't show, but the debt has gone down since 2020. So the last 5 years, comparing the debt, it's up overall within the last 5 years. The lowest was at 89.2. Let's look at the operating income. I don't have any of that. Cash flow, 626. They do have some cash on the sidelines. So this one's a tricky one. Let's look at the chart. Short term, this looks like a good stock. Long term, I would say no for now. Next up, SHG. We have here Shinhan Finan. What is the correct? Financial group. It's a Korean bank. I'd stay away from it with everything that's going on. So we have here dividends. So we have, are they paying rising dividends? So they only pay once a year. That's weird for a bank. Typically they pay quarterly. I've rarely seen banks that pay just once a year. Splits 2-for-1 in 2012. So we have here, let's look at the nice earnings. Difference of $10 from the 52-week high to the 52-week low. We have here also, let's look at some financial data. We have here from net income, $1 trillion company in Korea. Whoa, okay. So these guys are actually supposedly one of the best banks in Asia, or possibly all of Korea. They probably are the best bank. But again, they only pay once a year. Let me look at the chart. So we have here, let's look at the 5-year. It's been going down. It's been going flat. I'd stay away from it. It doesn't seem like people are interested in this stock. Weird, because for a $15 billion company and to just have that price, like, that's pretty damn low. I'm guessing it's because Wall Street does not like a lot of foreign stocks, especially right now. Foreign stocks can be pretty decent, actually, because you're actually diverse. It's part of diversifying, because you don't, have all your assets in the U.S. So if the U.S. were to take a hit, you could avoid that from getting foreign stocks. But in the case of the war that's going on right now, and under the circumstances, actually, people are just investing more into the U.S. So again, it doesn't look like Wall Street likes this stock. So I'm going to say it's going to be a downtrend for the year. It sucks to say, because this is a good stock, but the chart and the downtrend doesn't support it. It's not showing any reason for it to go up. So it's weird because it's like it's a good stock and it's an expensive stock based on the numbers, and for Korea it's very undervalued, but nobody has interest in it. That's just the plain answer. That's all it is. Nobody's interested in that stock. Next up is, it's not this one, FABK. I was trying to get my research together, and then I put in the wrong letter. It was supposed to be VABK. So FABK, this stock does not count. Again, I apologize, and this was a stock that wasn't supposed to be on here, but I just punched in to put in my research VABK, and that was to solidify the search. So we have here 2.1 at the earnings, 52-week low and high. Could be better. I'm not too crazy about the 52-week low and high. The volume needs to pick up. It's pretty flat. It's just not being supported either. This is a stock that's not being supported. So let's look at the dividends real quick. Paying same old dividends, and that's just not a good sign. Paying the same dividends. As you can see here, it's a very, very slight. Come on, draw. Let's go to the drawing board. It's like a slight downtrend, as you can see. Like a slight downtrend. So slowly going down. It's not like a drop like that. But it seems like the stock can take a hit. And the last uptrend was right here. So the date for that was about mid-June. In mid-June. So VABK, I'm going to say no to this stock. It's not that good. Next up, ZIONO, Zion's Bancorporation. I only have two more stocks after this. So they are paying dividends. Whoa, okay. This is a very strong company. I definitely watch list this stock. Yes, they're not paying rising dividends, but these guys are earning. These guys are earning money. They know how to earn money. They're doing something right, put it that way. So how are they managing this money? And they're a $141 million cap company, so they're very, very small. That's weird. That's wrong then. So I apologize. Market cap here says 141 million, but then how come I have 1.13 billion in net income? That makes no sense. I'm confused. So, in order to avoid confusion, let's look at the charts. 5 years been going down. Nobody seems to like it. So I'm gonna say no. Let me see where they do business. Cali, Arizona, Nevada, Colorado. So mainly Midwest, I guess, and out west. So they have banking products in Arizona, Colorado, a few other states. Okay, so not bad. We have a no on that stock. So 2 more and we're done here. Navient Corporation, 5-year went up from 2020 all the way to 2021. And again, 2022, a bunch of companies are going downhill, downtrend, as you can see. Very strong earning stock. They do consumer lending, so they're paying dividends, steady dividends, not rising. Now let's see. Okay, they earned more in 2021 than 2020. And they earned more in the past years. Debt, I'm not crazy about at all. Look at this number. I do not like that. Do not like that. I'm gonna say no to this one because that debt is too high. Way too high. If the debt was lower, this company, who knows? But what I don't get is how come this is like $2 billion company, but then the stock is only like $16. I don't know what to tell you guys. I guess people or firms and overall people don't like it. That's just the fact. That's just the fact that I see. Those are the facts. So NAVI, I'm gonna say no, and then I have the very last one, and we will end this. LKFN. We have LKFN, so we have decent earnings. It's like over just under a $2 billion company. We have 2021 statements, so pretty good. What is their debt? 89, not bad. So do they pay rising dividends? Yes, they do. They are paying rising dividends. I definitely add this to the watch list. Definitely would considering. I mean, not me, but this will make a nice purchase for someone if they like the banking sector or stocks or both. They like the financial services sector and the banking sector. Let's look at the chart. Let's see if people are supporting it. But PE, I have it as overvalued, so it could drop a little bit more, hopefully. Let's look at the 5-year. Not bad. The 1-year looking kind of flat, but that's still not bad. I'd rather take a flat than going down. So I would hold. I will hold off. I will watch list it and hold just to see what happens. So that's it. Thank you guys for watching. I had the 10 stocks. Hope you guys learned a thing or two. Again, like, comment, subscribe. I'm gonna continue the next 10 later on in the week. But thank you guys for watching, and I'll see you in the next one.